Hey, I'm Gene Goldman, and here's a look at the week ahead for the week of March 13th. Well, last week was extremely volatile. Investors were trying to read clues in terms of where Fed policy is headed. We saw multiple readings on employment. We saw Jay Powell, the head of the Fed, speak in front of Congress. If growth is too strong, there are worries that the Fed will be more aggressive to combat inflation, in other words, raise rates more. And with all this said, this leads us to this week. This week, we're going to get lots of economic data on manufacturing, on retail sales, on housing, on consumer sentiment. These are all important, but they take a backseat to the big report. And the big report is February CPI, which comes out on Tuesday. If you look at the consensus expects headline CPI, so that's the main number, to decline from 0.5% last month to 0.4%. Year over year, it's expected to decline from 6.4% to 5.9%. If you look at core CPI, so that's where you take out the volatile food and energy prices, it's expected to be flat at 0.4% month over month. And if you look at year over year for core is expected to decline from 5.6% to 5.4%. Overall, markets are waiting with bated breath because if this report is strong, it puts pressure on the Fed to be more aggressive. And more aggressive means further rate hikes. If it's weak, there is optimism that the Fed could further slow rate hikes. We'll see. Unfortunately, we think that it might be a little bit stronger than expected. And there's three key reasons why we think this. Number one, the January data, so 2 months ago, was very strong, helped by really warm weather. A lot of this probably carried over into the month of February. Second of all, used car prices rebounded. As you see here, we tweeted this last week that used car prices have picked up. This is part of CPI. And then third of all, the most important data point, you look at the PMI indices, the purchasing manager indices. Remember, these are the first look at last month's economy. If you look at the underlying subcomponents, prices paid, these are both pretty high. If you look at prices paid for services, it's well above the all-important 50 level, and above 50 means expansionary. Prices paid for manufacturing, while it's trending higher, it's still above 50, but it is trending higher. Our overall takeaway is the next Fed meeting on March 22nd, the markets are watching, trying to figure out how aggressive the Fed will be. Will they raise rates by 0.25% or be forced to raise rates by 0.5%? CPI this week will be a huge determining factor in terms of what the Fed does. Thank you for listening. For more information, please follow us on Twitter at Cetera IM, and I'll see you next week. Thank you.